Good morning. Last week of July, time flies. Lot to talk about this morning, both in terms of the overnight, what it means for today. Actually, there's really not a heck of a lot to talk about in terms of the overnight, as far as I'm concerned, but we'll talk about it anyway. Um, and then what's on tap for this week. So, while folks are joining, we'll talk real quick about the markets here early on. Asia, generally speaking, up across the board, if not totally speaking, up across the board, but in some cases, flattish. Europe, same. Here onshore, sort of indicating up big, a point across most indices. VIX down about 4%. Platinum leading the charge in commodities up about 2%. The big story, oil, natural gas, all down 3 to 7%. Crude down to 84, almost 6%. Brent down to 90, almost 7%. Dollar mixed versus most currency. Bitcoin up about $500. So question is why? Listen, I'm not going to look a gift horse in the mouth, but President Trump, and I think the words are, giving the peace talks some space or some room to breathe or some air or something like that. So I guess it's 2 straight nights of strikeless action in the Middle East. Is that a good thing? Sure. Listen, this is sort of like an old man on his porch, throwing his fist up into the air. I just have fatigue over one day feeling good about it, one day feeling bad about it, when in reality, nothing has actually changed. Listening to rhetoric and trading the rhetoric creates volatility that traders crave, right? And that's how traders make money. But it creates real distortion for the greater market. So long story short, take some positive news and around support on the chart. And we talked about Friday, kind of like, what's the point of locking here? And, next thing you know, you are, about 3, 4, 5 ticks better off. So before we get to this 8:30 data, which there isn't a ton of anyway, 10 sitting at 464. 6s are right in that sweet spot that I was talking about. Ginny 6s, call it 101.24. That 23 to 27 is fair, if not good level. 6.5s, 103, 10-ish. Kind of getting back into the ballpark of some normalcy. So, long story short, you kind of have a little bit of a dead cat bounce down in coupon, up in coupon, reverting to some reasonable levels. How do you likely trade that here today? I think it depends on your story, right? So if you've been caught offside, I tend to be optimistic about the forthcoming data, maybe a little less so about the Fed on Wednesday. But in some ways, maybe you don't have much to lose, so you kind of hang on. I think if you took somebody in as a floater last week, you maybe have a little bit of a good story to tell. Maybe you're 25 basis points in fee, an eighth in rate better. To me, that's a lock the dip scenario. Durables. And listen, before we celebrate this, we expected 2.5. It came in at 0.3. Huge miss, not uncommon for durables. CapEx beat 0.9, expected 0.8, also revised up. So a little bit of a mixed bag as far as the 8:30 data. I don't think that that's anything that anybody really cares a heck of a lot about, and or that the Fed will care about in their decision on Wednesday. Tomorrow we got ADP and some housing data. Let me just pull up this other. So I want to talk about the money supply a little bit. here in a second. But tomorrow we've got ADP and some housing data, Richmond Fed, Dallas Fed, Fed decision obviously on Wednesday. Thursday, personal income, personal spending, obviously PCE, Q1 GDP. You got June PCE. That's outside of trying to get into the Fed's head. That's sort of the highlight of the week. And then Michigan sentiment on Friday as we close out the month. Bach posted this morning, and this is something that, I've been talking a lot about, and noticing sort of an increase in the money supply. They, put a number on it this morning, so it made it easy for me to not have to go dig. But I quote, it's with the Fed decision upon us, it's a fine time to note that the U.S. money supply is growing at its fastest clip in 4 years, 5.6 annualized. Now, here's where they lose me a little bit. While there's no hard mathematical link between growth in the money supply and the decline in the dollar's purchasing power, however measured, we know inflation is always and everywhere a monetary phenomenon. So, Sir Milton Friedman, only the government creates inflation. I find it interesting that my friends at Bach note that the money supply has grown at its fastest clip in 4 years, and then sort of tie it to inflation without exactly tying it to inflation. Dare I say, I'm going to give you guys, if I had this power over at the Bach desk, to say what we know, which is that, and it is directly correlated. What it might not be is immediately correlative, right? But if we add 5% to the money supply, at some point, we're going to increase inflation by 5%. And while we've talked a hell of a lot about the price of oil and the way we've discussed it, I'm sure this won't be a surprise to you that the price of oil has absolutely nothing to do with inflation. It has to do with higher prices. Those things sound similar, but they're not. That should give one some pause. Now, where I don't know if hypocritical is the right word here. Maybe it's more that I'm just being convenient. But if I was to be a little bit hypocritical, I'm going to reverse the whole volatility trader thing, right? Is who cares if we know that we're going to print the 5% inflation number, which, by the way, I talked about December, October, November into December, January, February, March. We already printed some of those hot numbers. So some of that 5% and change is already in the numbers that we've digested, for the record. But if I use volatility to our advantage, what do we care if we know we're going to print a higher number if in the short run we have some sort of back to the table ceasefire, price of oil goes down, the Fed calms down, everybody takes a hike or two off the table, and bonds rally. I think that that's a very likely scenario for us, in that we're going to have a win here to celebrate sometime soon, but it's going to be reasonably short-lived. And by the way, I go to something that I talk about almost on a weekly basis, and certainly did last week. That's also no surprise. Why? Because we talked about 23rd, right, of July 23rd, 25 was sort of the bottom of a new high that we made into September. We're now 2 days of rally coming off of this, right? We expect rates to go down through September, and we expect rates to go up, through November, into December. And so one might wonder, right, if we're kind of holding out like this inflation number. There's always sort of going to be a reason why the calendar works that way. A lot of times it's, the Santa Claus rally, or it's back to school, or it's graduation, or it's summer, or it's winter, but we can always kind of tie it to something. So I think what's most likely to happen here over the next 60, 90 days is some sort of celebration of a truce or whatever. Rates rally a bit. We wake up in October, potentially print a couple of hot inflation reports. and then rinse and repeat. So there you have it. In case it was sort of lost in translation, what am I doing today? Right now, where we've come from, where we've been, 6.25 and up, and certainly 6.25 to 6.75. I'm pretty much full on lock today, locking the dip for an early to mid August closing. If you want to take on some risk into month end, here's what you're betting on. You're betting on week data, period end. And we have certainly been heading in that direction. We didn't have a lot overnight globally, but it was a little bit weak. I think on 5.5s, if you look at a 5-day chart, right, we are maybe 25 in fee better, right? And we are, call it mid board on a 5-day chart. So if you got caught offside on a floater earlier in the week, yeah, I'm probably 70% locked there. Certainly a closing in the next couple of weeks. I pull out to a 1-month chart, not as happy. I would say we're about 8 ticks, another 25 basis points away from me really saying, hey, Bulls and Bears, I'd lock this. And 5 coupon, you're probably still holding your breath, which is 5.25, 5.75 note rates. So as always, thanks for joining live. Thanks for watching on replay. Cam Schlittler with another great game. Yankees yankied it up last night. Terrible defense, terrible pitching. Kind of is what it is. Some interesting golf over the weekend. Jackson Koivin wins in his 3rd start. That seems to be happening more and more. Kids, eat your Wheaties and start figuring out how to play your sports younger and younger. I will see you guys tomorrow. Bulls and Bears make money. Pigs get slaughtered. Choo-choo.